we are discussing really is the digital rupee. The Reserve Bank launched it with some degree of intensity of effort 2 years ago when they picked up about 10 banks and asked them to start identifying their customers, to give them the right to open a wallet where they can take out some of their money and put in as an e-rupee. Now, just as a preliminary or a preface, I want to tell you how it is different from UPI. I guess most of you know it since this gathering is a Web 3.0 gathering. But nevertheless, for those of you who may have strayed in without knowing this minor difference, if I pay Tirtha by UPI, it is going from my bank account to his bank account. But what happens in the CBDC is, I create a purse in my phone or in my laptop, in my iPad, where I transfer my money and put it in, say 100 rupees, 500 rupees, 1,000 rupees. And then, if I pay Tirtha into his wallet, the bank doesn't know whom I'm giving the money. So there is a degree of anonymity. At a time when you want to perhaps donate to an organization that is not very sympathetic to the government, or which the government is not sympathetic to, in these vague cases, you may perhaps enjoy the anonymity. But just normally, why should everyone know where I am spending? It is that anonymity that the CBDC, Central Bank Digital Currency, or what you can simply call e-rupee, was launched. The e-rupee had some use cases, but I think the person best placed to tell us how the e-rupee is functioning is Ajay Rajan from Yes Bank. Yes Bank was one of the banks chosen of the 10 banks to launch the e-rupee. So, Ajay, why don't you just tell us what has been the progress so far? What have been the uses of e-rupee?
Perfect. Thanks, Lata. But I think let me first qualify that the primary difference between UPI and CBDC is UPI is actually digital money, whereas CBDC is digital currency. So it's actually money or cash in a digital form. So that itself becomes a fundamental difference. One is a payment instrument and another is actually cash. So it has stored value plus payment as a functionality. Right? So it's actually far more than a plain UPI. So you're absolutely right. We are in the third year of digital rupee now, or CBDC as we call it. And it's been an interesting, rollout. It's actually not yet launched. We are still in the pilot phase. As we speak, we are 19 banks. Plus, more importantly, we have 2 PSOs also now. So 2 licensed entities, Cred and MobiKwik, who are also now authorized by Reserve Bank of India to issue digital rupee. So that's a big...
That makes it 21.
That makes it 21. So it's a big step forward. There is around 850 crores of digital rupee currency in circulation. In terms of user base, we are around 7 million users.
7.5 million. That is the number I got 1 hour ago from RBI.
Absolutely. And in terms of merchant, so it's supposed to be both P2P and P2M. So in terms of merchant, I think the beauty is because it's now interoperable with UPI, so practically the entire 6.5 crore merchants who today use UPI are also eligible for CBDC. So that, in terms of scale is where, we've reached in the 2 years. So the way I think I would define, these 3 years. So the first 2 years actually went into developing use case around P2P and P2M. Trust to technology, a new payment mode is really, where the time went. But the third year, in my view, has been actually a lot more rocking and a lot more, innovation actually coming in. So, in fact, the last GFF saw 8 new product launches, which was incredible, only on CBDC, including, launches by Honorable Governor, Deputy Governor, and ED. So, around 8 new product launches on CBDC were done. Equally important, CBDC sandbox was rolled out by Reserve Bank of India. So that actually is a call out to all the fintech innovators, that come innovate and build innovation at scale, on CBDC. So that's, which is there. 2 very key features have also, been launched. One is programmability. And that, in my view, again, both from a P2P perspective and also from a government disbursement perspective, is actually going to be a game changer as, as we speak.
Fair enough. Programmability. Now, that's another word that will keep coming. And again, I'm sure a large number of you know, but for the few handful journalists like me who are not very familiar with the programmability word, it's like this. If I have 500 rupees in my CBDC pocket, okay, I've taken it out from my bank and put it in my wallet. If one of them is programmed in such a way that it can only be paid for medicines, that is programmability of the e-rupee. Okay, normally governments would do that when they are contributing to the citizen for a very specific purpose, to make sure that you're not spending it on something else. And that is where the government comes in. Okay, since Ajay has already laid out where it is used, I'm going to now go over to where it can be used or where it is already being in use. And for that, I'm going to go over to Ashish Singhal. Now, Ashish Singhal occupies a very important position here. This organization, IBDIC, Interbank Digital Infrastructure Company, has been set up by what? 14 banks?
18 banks.
18 banks. They own his company. And the idea is that every bank is an internal network. So to integrate the networks with programs so that bank-to-bank transactions can be done, government-to-bank transactions can be done. So Ashish occupies a very important position. Ashish, if you can tell us what is already underway in terms of the next use that we can expect. Close.
Thanks, Lata, for this. And under no circumstances, I hold a very important piece on this stage. The bankers will always be supreme. But I think the important piece where Ajay left off and to build on that on programmability, a couple of pieces which we are working on, and these are still initial days, is MSME financial inclusion, where we've said that typically in a supply chain, when funding has to happen, deeper tiers of supply chain who are not directly supplying to a credit-worthy anchor, how can we go and fund them? So we have run a sandbox pilot with RBI, which we exited recently, where we are tokenizing these invoices which are issued by the tier 1 and accepted by the anchor. And these tokens flow through the system. Now just imagine today in a normal world, for a PSL benefit, banks will, give these loans and then...
One minute, Ashish. PSL priority sector is not as common as GDP.
Okay.
So please,
okay. Sorry.
fewer abbreviations.
The issue of banker on the forum, but yeah, priority sector, those are specific money which needs to be lent to promote lending in the under-penetrated segments, etc., which is called priority sector lending. There, today the bank lends and then they report, etc. Just imagine if the money which comes as wholesale CBDC to the bank, which is programmed to be lent only for priority sector, and through the deep tier financing, it goes to a SME as CBDC, and the money, and then that money gets exchanged into the normal rupee. Either they can go and spend at the merchant for buying whatever they want to buy, or they can convert that into actual rupee and do their normal transaction. So there actually the funding has gone as part of programmability. So similarly, the other piece which we are working on is on the trade side, because there's a, currently our trade and exports are growing at about 8-9%, and to meet the 2 trillion trade objective by 2020-30, we require a CAGR of close to about 16-17%. In cross-border, just imagine today if you have to transfer money, so for INR gets into, you go to a bank goes into the corresponding bank in dollar, then there's it gets converted, and then the dollars settlement happen, and then it is paid to the importer in case you are exporting some things, etc. So that entire piece takes about 2 days, 3 days, at best 1 day, and given the currency fluctuation, even within this 1 day, this is a huge risk. Now, if these can be replaced by CBDC, and instant settlement can happen, so I pay by CBDC, and there's a bilateral arrangement between, let's say, if I'm exporting to US, There's a bilateral trade agreement between India and US for conversion of CBDC. The person on the other side will be able to get the money immediately. So that entire currency risk goes away. Again, these are programmable pieces which can come into play. Okay. So there could be multiple pieces on programmability and tokenization which can take this entire journey to a very, very different level.
The only problem is you took the wrong example. The one country which will not enter into a CBDC with us would be the United States because they want us to use stable coins rather than they use CBDC. But I think we are having some conversation with MAS, with Singapore, and the expectation is that if your child is studying there or if someone, you want to send small money, not really major transactions, I think they have taken off a bit for you to be able to send it in a common central bank digitized currency, but still experimental, I think.
Summarize, actually, the technology now is no longer a challenge. So CBDC solves for the technology part. The geopolitical considerations, if they are solved, I think the money movement now can be instant and efficient with a lower cost, I think is the moot point. And that is really where I think India has moved from a CBDC perspective.
Actually, Tirtha of BCG also wanted to elaborate on the trade usage. You're free to add more to what Ashish said, or any other use case that you have come across in BCG.
Absolutely. So, building on what Ajay and Ashish has already mentioned, I think there are 2 points that we want to add here. One is that a future use case is in terms of cross-border payments, the efficiency part of it. So there have been pilots which have already been executed by some of the other countries. And what we see is that the cost of a cross-border payment can be reduced by 50%. The settlement time can be brought down. For remittances, it can be brought down from 1 to 3 days to seconds or almost instantaneously, right? So that's a huge unlock. And given India is one of the large country with the largest amount of remittances, $150 billion of annual remittances. So that's a huge pool to unlock. On the cross-border trade part, so right now, India's trade with a lot of different global blocks are increasing. The trade with Asian is increasing. It's about $120 billion. India's trade with Africa has increased to $100 billion plus, right? This also gives, CBDC is also a conduit for us to de-risk our dependence on some of the other foreign currencies. This helps us, so if, let's say, India gets into CBDC engagements bilateral with some of the African countries, maybe we do not need any other global currency to
intervening currency
to lean on. So that's something that we can look forward to.
No, fair enough. Actually, just to elaborate what Tirtha said, we are attempting this even before e-rupee in the Asian Clearing Union. You don't do gross dollar settlements. Okay, I buy from Thailand buys from South Korea buys from Malaysia. The entire ASEAN bloc periodically decide how much is the net payment. After I pay you and you pay them, it's all dollars. But you don't buy so many dollars, you only net it out. So every country is buying and selling less dollars so that there is a ease of clearing. That's happening in the Asian Clearing Union. If we could do that bilaterally with, say, Sri Lanka, for instance, you just have the Reserve Bank deducts that much from the account of the Central Bank of Sri Lanka, or the Sri Lankan Central Bank increases or deducts, then neither of them are going through a New York bank. You save that much in terms of time, in terms of the currency loss. Those are the things that bilateral arrangements is what he's speaking about. I just said Sri Lanka because probably that is easier in terms of there being a lot of exchange and a lot of people moving to and fro. Well, to you, Devansh, what other use cases do you see or have you already seen discussed at ENY?
Yeah, so there are a couple of additional use cases that I've seen. The first one is mostly around the supply chain traceability. So mostly when we are exporting to markets outside India and where there is a carbon tax applicable, or there is a requirement for showcasing the ESG traceability, that's where having the right technology helps in identifying what is the overall route and what are the sources, and hence it can help you justify a lower tax rate possibly, or reducing the ESG specific overheads that you might end up while you are exporting to these markets. That's one piece that we have seen being incorporated not just by smaller organizations, but a lot of multinationals who are exporting, manufacturing in India and then exporting to other geographies. They are doing this to ensure a better tax applicability for their operations. The second aspect that we have seen, and this is again which is coming up, is on the healthcare side. Now, on the healthcare sector, that's another space where there's a lot of electronic data for each patient that needs to be there, and there are different organizations, different hospitals maintaining that data across. Now, as an insurance provider, I don't have access to all those reports or all the data. So, that's also one way of democratizing that data and ensuring quicker resolution of the claims and bringing down the time as well as the cost of doing that piece of business. I think these are a couple of areas that I've seen coming up.
Where, of course, digitization and AI can help. Ajay, I want to make the question more specific. Ashish went on to speak about a possible use case, right? That, priority sector lending can be programmed in that fashion. Can you tell me something which is underway, where you'll probably see e-rupee being, or this programmed rupee being used like tomorrow or next month or next year?
So I'll give you a very interesting use case which is actually underway, and not live, but it's kind of in good discussions. Asset tokenization, I think we all realize, is going to be very prominent, right? And we are in a Web3 summit, so undoubtedly, there are going to be very, very prominent use cases, for doing this. Now, any asset tokenization solution will also require a legitimate settlement, and this is where CBDC can actually play a very critical role, right? Let me take two examples here: carbon trading. Carbon credit trading or solar energy trading. Now, these actually, so there are two parts to it, right? One is the smart contract exchange, which will be required, for the tokens. But more importantly, the money will also need to be moved. And this is where CBDC can actually become the legitimate currency, which can move, the settlement.
Why is the e-rupee better than sending money through SWIFT?
No, because it's tokenized, right? So we are talking about tokenized assets. Okay. So tokenized assets will require a tokenized
settlement. The
carbon
credit is a token.
Absolutely. Okay. So I'm saying, as and when the legitimized token economy will increase, you also need a legitimate token settlement. And that's where CBDC can actually play a very significant role. And that, in my view, is right now happening. The discussions are happening. Some pilots have happened. I think once it is approved, it can go done. The second where, we've had discussions, and I think, again can be a very potentially good use case, is tourists when they come into India. Now, invariably, you will find that, either they will bring in currency or they will, at the airport, exchange cash to cash, right? Now, the CBDC, for example, if you are able to give wallets on the go, which again RBI has
attempted.
Exactly, right? Now, if against the passport KYC, which is done for the tourist, if we are able to issue CBDC on the go, the wallet can be loaded against that cash. You are doing two things. One, you are actually eliminating the usage of, cash. The second more important thing is you're actually giving the flavor of India's prowess on digital payments to the global at large. I remember, in G20, when CBDC was showcased.
But who is giving that money? Is it a bank or?
No, it will be the money changer. No, it will be the money changer who's sitting in.
No, I'm asking the question deliberately. Okay. When the money changer gives me the money, he will normally charge me 90 rupees for the dollar. If you want to eliminate that, he will give me so many rupees, so many dollars worth of rupees. If it is coming from a bank or a money changer is worse than the bank, but even the bank takes away 5%. But if it is good, what the Reserve Bank genuinely wants is that should be brought down. It is 88.69 today. They should give it to you at 89. Because that is the only effort that goes the actual expenditure is just that, but that's
So
not happening.
I'll just break it into two. So one is the currency exchange. So dollar has to be converted to rupee. That is a given.
Yeah.
The second is the currency movement into digital, right? So the second part is easily solvable with CBDC. The first part is actually a conscious call which needs to be taken in terms of the FX exchange rate, right? So the retail FX platform, for example,
Does give you
eventually
a smaller
at some
margin.
stage, could also be opened up for these kind of conversions. In which case, then it becomes an open source platform. You can bid for the FX and get the volumes. So at some stage, all this, can be intertwined to really bring a very good experience
for the tourist, for sure. Okay,
Just to add to that, the piece which you raised in terms of the markups, etc. See, when we look at these markups, what is the London rate and then what is the rate, we forget that today there are a lot of compliances which the money changer or the banks need to do. The moment the money is moving digitally and you're depending on the KYC of passport, etc., you are reducing those processes. As a result, the overall system will become efficient. Assuming that their margins continue to be the same, the overall cost will still come down.
And Lata, I just want to add one most important facet of CBDC, which in my view, in the future, that will be the real game changer, which will differentiate CBDC with any other payment system. So offline use cases are, is already live in some shape and form. Non-proximity SMS-based is already live. The Reserve Bank has been continuously working along with the ecosystem to see what are the other ways that offline CBDC can be proliferated, right? In every RBI hackathon, if you see the Harbinger, offline CBDC use cases are always one of the areas where they want people to innovate. Now, the DBT solves, along with programmability, one part of the money transfer, right? But India UPI is still, I think, 50-60% penetrated, because in low connectivity or no connectivity, you still have, cash.
Problem of paying through UPI.
Cash is prevalent, right? So that is where, if offline CBDC, for example, can become a big catalyst.
Placement.
Absolutely, right? So there, if once we are able to solve, and now the CBDC sandbox, in my view, could propel innovation, on offline. So that, when solved along with so programmability will ensure that DBT is transferred directly to the wallet. The usage of money in the wallet, no longer do you have to go to the bank, take out money. If you can use it in an offline form, in a, no internet or low internet, I think that solves for real financial inclusion.
Actually, it is more than just beyond the 60%. Let me tell you that in the last 1 month or 1 week, I know 2 instances of people who told me that their GPay didn't work. I wanted to pay over GPay, or it didn't work. And in one case she, and in one case he, didn't have the money, because he thought he's going to pay the petrol pump with GPay, and he was desperate because he was calling cousins and all and saying, can you GPay? And many of them didn't have, because he was a taxi driver. The genuine problem of, this suddenly internet or electricity not working can be definitely resolved, not only in unavailable areas, but
urban,
even in, the board over there is screaming, time's up, so I'm going to give a brief time to all of you. And then I have an optimistic list to read. Okay, I just wanted to ask you, is there any forthcoming technology that we should be aware of? Emerging technology, which will be useful, Ashish?
So in terms of, I think it's no emerging technology apart from quantum, etc. But the piece is that there have been blockchain, tokenization, they've been an annual, and they're just waiting to break out and be adopted at large scale. So that, in the next 3 to 5 years, that is what we should look at and brace.
Okay. Yeah. Maybe I could just vary the question. Either you speak on emerging technology, or what is the challenge? Is UPI the biggest challenge? It's working so well. Why do you want a CBDC?
So I think I'll just take a minute to answer the first part. So one of the emerging technologies which Nandan Nilekani talks very eloquently about, it's the Finternet, right? So in India and in the global south in general, there is a lot of asset which is not completely monetized and capitalized. India's mortgage penetration is significantly lower than a lot of other countries. So, if there is, once asset tokenization goes into motion, if land can be tokenized, there are other, let's say art, there are more collectibles, luxury items, if they can be tokenized. And then, the other side of tokenization is the realization of that. If that can be done via cryptocurrencies, by CBDC, that's the way to go.
Fair enough, fair enough. You all get about half a minute each. Okay, first to you, Divyansh. Want to speak about some challenge or emerging technology, one of the two?
Yeah, I think one of the challenges which I see is, with going digital and digital currency is from a security standpoint, we are also sharing a lot of information. So one of the aspects which are coming in is, zero functional sharing, which is, you share only a part of the information and it is able to fetch the entire.
CBDC is safer in that sense.
Yes, exactly. So even if it's your KYC or other aspects, you don't have to share your date of birth, your email, your passport number, etc. Only one key should be able to fetch the information.
No, I think that's a very big point you're making, because someone the other day lost his mobile and he was 5.5 lakhs poorer because someone could use his GPay. I don't know how they cracked the code, but the point is now losing your phone is not just losing your phone. It may mean your bank account getting cleaned up. Anything else in terms of emerging?
I'm generally very excited about use of AI in financial services. I think, we are at the very nascent stage in terms of really harnessing the power of AI in financial service. Of course, RBI's, report on free AI, I think that sets the framework in terms of how ethically banks or financial institutions should use AI to innovate. So I think the next couple of years will really be transforming in terms of how AI will define financial services.
And we have to see where e-rupee figures. But I must read this list because it's extremely encouraging. The e-rupee has made progress, and I'll tell you why. There is a PM Vidya Lakshmi program where they give scholarships. That is working in several pilot areas on e-rupee, because that rupee is programmed and given to the student, and it will only be accepted in recognized colleges. So in Vidya Lakshmi, the e-rupee is working. The e-rupee is also working in a unified pension scheme for informal workers. Again, you're able to identify who the candidate is, and it is working over there. What is also live in e-rupee is a G-Safal program where the government of Gujarat is giving aid to women to start enterprises. It's working in multiple schemes in horticulture. It's just ready in Uttarakhand, not yet gone live. And there are other areas like Haryana where e-scooter purchases are being paid for by e-rupee. So the government of India actually has gone a little ahead of the banks in trying to make the e-rupee work so that the exact expected beneficiary or intended beneficiary gets the money. There's a lot of hope and optimism around e-rupee. Thank you very much, Ashish, Tirtha, Ajay, and Divyansh for taking us through this conversation and giving us the benefit of your ideas.
Thank you.